This video is for you if you're a business owner who wants to understand a little bit more about the importance of bookkeeping and accounting. And I'm going to go deep dive into this little part of this Triangle of Truth video series that I'm doing. I've done another video where I talk about the whole Triangle of Truth and I talk about these three components and what it all means in the middle. Go watch that. There's a link below. It explains all that. But this particular session is all about just this component part down here, which is your bookkeeping and accounting system. It's the past of your business. It represents the story of what's happened in the past in your business. Whereas the budget and forecast is your predictions for the future, and it's where we get our targets from. And these two talk to each other in a way, because what we want to do is gain some certainty between where we are and what we've done and where we're going to go and what we're intending to do. And at the top here, the third part of it is the things that we're going to do to get there. So we've got past, future and present as the three component parts. And if we have those three component parts and we understand them in our business, we get an element of truth. And the truth element comes because business owners are great at telling stories, made up stories about how they are. And I can guarantee you this, because you can prove it to yourself, is go and talk to any business owner and just say to them, how's business? And they'll go, oh, all right, it's okay, right? What they won't tell you necessarily, your close friends might do, but what people generally don't tell you is, yeah, I struggled to make payroll last week. I haven't been paid for the last week myself because I've chucked everything in the business. It's hard. It's difficult. I'm struggling. All right. They paint a good picture of what it's going to be. Equally, when you ask, hey, what's your sales target for next year? They'll pluck this random number out of thin air. Okay. And they say, well, I'm aiming to do that. And they go, okay, what are you going to do to that? Particularly if the number is a gap between what they did and what they plan to do. £1 million is a great number to go for. I want to do £1 million worth of sales next year. Great. What did you do last month? I did £10,000. Well, that's brilliant. But £10,000 a month to £1 million a year is a big gap. It's not just about selling more. Something else has got to change, because you might sell it, but you might not be able to deliver it. A whole bunch of things have to change for your business to grow to that level. And where do we get that information from? Well, first of all, let's understand what you have been doing, because there'll be clues in there. And in this part of it, I want to give you my 5-step principle. And business owners generally don't want to be doing the bookkeeping and accounting themselves. And I am a great advocate of that. You want to outsource this. You want to delegate it. You want to get the systems doing it for you. But you cannot delegate the responsibility. As a business owner, you are responsible. You can get the job done, but you must retain the responsibility. And the retaining responsibility comes with the step 5 that I'm going to show you in this 5-step process. So step 1 is we've got to get the data in. In what? In the books. You've got to get the data written up in the books. Now, in the old days, when I was training, it was a handwritten cash book and we wrote it up and we added up. My mum was a bookkeeper many years ago, and she told me that she used to add up rows and columns of cash books in her head, just total at the bottom. That's how they were trained. In came the calculator. I must admit, I used a calculator all the time, but that's how I did it manually. Write the stuff in a book, total on the left, maybe the VAT, then describe which column it goes in, description of date, write it up, add it all up, and something called cross-casting to make the page adding up, right? That's what we did. Then in comes the computers. Back in the sort of 1980s and 1990s, computer systems came in. And then more latterly, we've now got cloud-based systems so we can collaborate with other people and bring stuff in automatically. It's all brilliant, but underneath it is the basics of getting the data in the books. And the data consists of sales. We want to get our sales into the books. Sometimes it's sales invoices only, and therefore the money is a separate thing. Sometimes it's a till. Sometimes it's a cash sale. There's sales, but they're sales. Then we've got our purchases. These are the things we buy on an invoice. So you might have a supplier account or something like that. And then you've got money in, And you've got money out, the actual bank account. So this is your bank account. And of course, into modern days, we've got multiple bank accounts, sometimes even more than you realise, because you might have a Stripe account, a GoCardless account, a PayPal account. These are all separate bank accounts. And then you've got your current account, and then you might split your current account into pots because you've got different savings for your VAT and your pot. They're all bank accounts, which makes the whole thing a lot more complex. Okay, but it essentially is money in and money out, the real money coming in and coming out, versus sales invoices, which you might raise an invoice for, and purchase invoices, receipts and stuff that you get from your suppliers. Okay, so this is just the documents. But essentially, those are the four books of a bookkeeping and accounting system: sales, purchase, money in and money out. Okay, so we've got to get the data in. How do we get the data into our books efficiently? Well, design a system that makes it easy for you. If you raise sales invoices and you're typing up a Word document, that's a bit 1980s, okay? Instead of typing up a Word document, use the sales invoice system in your software. If you've got an online portal, some online sales, connect your online shopping cart functionality directly to your bookkeeping system, so that every time a sale is made, it automatically populates the bookkeeping. But make sure it does both. Make sure it's populating the sales and the money in correctly through the Stripe account or the PayPal account or whatever accounts you're using. Make sure all that's working properly within your system to get that data in, because you don't have to be doing it again. If you're typing up a sales invoice in Word and then handing it over to a bookkeeper, they're just retyping it. You're paying somebody to type it into your system. Cut out the middle bit, okay? If you've got money in and money out in a bank account, you can feed the bank statements directly into your bookkeeping system. The software can read it with direct links to the bank to collect the data and build around a bunch of rules that says, I understand that this is for petrol, I'll post it to motor expenses. I understand that's the telephone bill, I'll post it to telephone. I'll understand that looks like wages, I'll post it to wages. That's drawings, I'll put it to drawing. It knows, because it has some intelligence now, and artificial intelligence will make this whole lot easier, that it can pull that data, the money in from the money out. So we might have our bank accounts, and I'll put accounts plural over here, can bring in the money in and money out. And we can raise sales invoices either from our web-based system or our invoicing system built in with the system, or if you're using some other invoicing system, that's cool, use it, but get it to transfer the data back into the bookkeeping using APIs and CSV files and all the rest of it. The last thing we want to be doing is spending a lot of human time, labor, typing stuff into a system, okay? Because when we as human beings type, even you might be the best person in the world, I guarantee you at some point you'll make a mistake. And when you make a mistake, that leads to error. And if you've identified there's an error, it takes a long time to find the damn error. So let's eliminate the errors in the first place by getting it to be automated. Okay? So that's step one. Step two, we want to check it. Okay? We want to verify that the data you've fed in correct. Now, there's a series of checks that we can do. We can, for example, do some bank reconciliations. And what the bank reconciliation does simply says, look, you've got a bank statement. One assumes that the bank statement adds up. You started off with an opening balance, you put money in, you took money out, there's a closing balance. We'll assume that the bank software makes your bank statements add up. Therefore, the balance on your bank statement as of the end of the month should be the balance that's in your books as of the end of the month, because you're basically taking that data and putting it into your books and analysing it. And as you put it in your books, you want to make sure that what you've put in is the same as what's on the bank statement. What can happen quite easily is that a 38 is typed in as an 83. It's wrong. There'll be a difference. Or something's obvious is wrong. You're looking and go, well, that doesn't make any sense. I seem to be missing all the bankings. I've got all the money out, but I'm missing the money in. Or I'm missing some sales for the month. There'll be some things that are obvious. So checking your sales, checking your purchases, checking your bankings, these are things to check. Other things to check is, have I got my wages in properly? Lots of people will post their wages and it'll be incorrectly posted. They've got the net pay in, but they haven't put the PAYE and the tax and the pensions in. Those are the sort of things that get missed. Has all the VAT looking right? Just run the reports and read it. First things first, does it look about right? Now, whether you do that as a business owner or whether you have somebody in your team that does that, all being well, I'll show you why that in a minute when we get to step 5. So step 2 is we need to sense check it. We need to actually verify that the data is correct. Because if it's correct and we know that we've checked a few things, we can then go, oh, okay, so now we can run some reports that are meaningful. Great. But before we do that, what you might have in your business is you might have some adjustments or journals. Now, the sort of adjustments that go on within a business will depend on the nature and trade of your business. It might be relevant that you have stock and work in progress. That might be a big thing in your business, and therefore a journal for the month-end stock and or work in progress needs to be put into the books as a data entry to balance the books out, make the reports look properly, make the reports look meaningful. That's the word I'm looking for. So there may be a stock or work in progress. It may be that there's depreciation. It may be there's accruals and prepayments. These are things that you will know about your business. For the vast majority of people, if you don't put them in, it's not the end of the world. Okay, it's not critical. And it's about understanding the materiality of your entry. If you've got a business that's turning over £1 million and you don't really have any stock or work in progress, but you've got a few bits in the yard or a few bits in the warehouse, and you go, look, my stock is about £1,000 because the stuff comes in and it goes out, and we never really keep stock. Well, whether it's £1,000 or £1,200 or £800 on your £1 million turnover, it's not really relevant. Okay, might be for your statutory accounts when you come to do your accounts at the end of the year, and your accountant might insist on doing that. That's fine, but from a management perspective, it might not be relevant. Okay, but if you've got £1 million turnover and your stock and work in progress is regularly at £200,000, £300,000, 400,000 some months, and £20,000 or £30,000 another month, that's going to have a big, massive swing of data between months on your business. Okay, so you've got to find out what's relevant to your business. Now, if you don't know, talk to your bookkeeper and accountant and get them to help you understand that. Okay, normally the entries that go into a bookkeeping system for adjustments may be no more than 4 or 5 entries to correct those books, and there'll be a system and a process to calculate those entries. But if they don't go in, be aware of them. So that's step number 3. Step number 4 is actually reporting. Now, you will run reports to do your checking. You might run some reports to look at your adjustments, but we're going to run some reporting. But what I really mean by that is you want to get to a point where you go, look, this is how our system works. Every day, every week, we feed the data into our system. And the way that we do that is that we manage our data sources and we bring them over to us so that they arrive. So, for example, if you have pieces of paper that arrive in the post, put them all in a tray. Then you can take that tray and you can scan them in using scanning software to get the purchasing in. And when they're scanned in, put them in another tray, perhaps mark them with a reference number that you've done so, sign it, say it's been done, so that you can quickly see whether pieces of paper have been scanned or not been scanned. You've got emails coming at you with PDF documents, which are copies of invoices. Great. Where do they go? Stay in your inbox? How about either feed them straight back into your scanning software or into a folder where they can be easily found, or go to the scanning software that you're using, see if there's an email address and get your supplier to send it straight there. There are lots of different ways, but basically the flow of paperwork and the flow of data needs to flow through the system so that when it's been checked and adjusted, you can start running reports that begin to look and make sense to you. Okay? In your reporting system, in your accounting system, you will have multiple reporting options. Probably way more reports than you will ever need. I can often go into an accounting piece of software, your Xero, your QuickBooks, Quicken, Sage, all those sorts of systems that you might be using. And more often than not, there are hundreds of different reports that we can go and find. But most of them we don't need, because they're specific reports for specific industries, or they're specific reports for specific timings, and they just may not be relevant. So that's why you often find there's a favourites, so that you can sweep all your favourites that mean things to you, so that you can run these reports. In those reports, we're ultimately going to be running a trial balance and a profit and loss and a balance sheet. Now, little secret in case you didn't realise, the entries on your trial balance consist of a whole series of nominal codes with a whole series of numbers, either on the left-hand side, the debit or the credit, or the right-hand side. But those two numbers, those two columns will agree. Now, the trial balance is in essence a summary of all the data that you've fed into your books. Everything that you've fed in will be on your trial balance. Now, the only thing to be conscious of is dates. Dates can be a bit of a nemesis when we're running accounting. Oh, the report doesn't look right. Wrong date, right? Okay. So dates are always a clue. When you run a trial balance, it will balance and it will have all of these account codes, account descriptions, and all of these numbers. In and of itself, it doesn't necessarily mean anything. It's a great way for drilling down. Oh, I found that entry, click on that number and drill down to the detailed transactions behind to see what made up that figure. Every single number that's on your trial balance, you'll better click on. It'll open up a nominal report, which will show you transaction by transaction, how it got to that total, right? Again, double check dates. Okay, dates. But as long as you're looking for 1 month's worth of data here, when you click on it and you've got the transactions for that month, that total should be the same as that total, which will help you understand what made up that total. But the reality is your profit and loss and your balance sheet report, when added together, are everything that's on your trial balance. Okay, the profit and loss and balance sheet isn't another report. It is a report of the trial balance. Therefore, all data coming in is going to end up on a trial balance. Now, if the profit and loss and balance sheet makes sense to you from your reporting point of view, then from that we can run any other set of reports off of the system, any other sort of analytic report, analysis report, graph report, because if we fundamentally know that we've checked it, we've done the adjustments and we're now running reports, we can now run all sorts of reports off the system because it's all using the same data from your trial balance. It's the same core data that's coming out of the system in a different format. Subject to dates. Dates. I'll say that a million times because dates is the red flag. Get your dating right of your report and you can run that report. Now, here's where we get to step 5. Step 5 of this is the most important step for you as a business owner. Interpretation. Okay, that's the bit that I want you to spend your time and energy is on the interpretation of these reports. So therefore, you can outsource and delegate the data in, somebody else can check it, somebody else can run the adjustments, somebody else can run and look at reports to be ready. And what you want is that person to be going, yeah, I think the data's right up to this point. Normally there's a cut-off date, normally a month-end date. So you might be sitting on the 10th of the month and somebody's gone, yep, I've got everything to the 31st of the previous month into the system, reconciled, checked, adjusted reports, and now we can start running reports for everything up to that date. Some people might want to do that weekly. It's up to you, your business. But monthly is probably okay. Okay, I definitely run my reports monthly, but I tend to work things on a quarterly basis. The way our business structures and my experience and my skill allows me to run my reports quarterly. It suits. But we still run the monthlies in between just to keep an eye on things. Okay, but whatever these reports you're running, interpreting them is the key. What does that profit and loss for the last quarter, the last 6 months, the last year, whatever the period you've run, what does it mean to you? What does it tell you about your business? Now, if you run these reports to screen, you might take one of the numbers that are on the reports and click on it, and it's doing the same as clicking on the number that's in the trial balance, and it'll reveal a detailed analysis of your nominal ledger. It'll tell you what all the data is. It'll give you all the transactions that made up that total. So you can go, well, okay, sales for the period seemed a bit light. Let me have a look at that report. Yeah, I remember all these customers. Those are the jobs we did. That makes sense. Gosh, it wasn't as much as I thought it was. Why did you think sales were higher, but yet they weren't higher? Maybe the efficiency of those jobs wasn't right. Maybe there was a gap between jobs. Maybe you thought you were busy, but actually each job, there was 2 days between each job. And actually when you add it up for the month or the quarter, you lost a week or 2 or 3 just through slippage, just through inefficiencies. Maybe you're looking at the job and realizing now that those prices that you gave aren't good enough. They're affecting your profitability. The job that you priced yesterday might be the same as what you charged a year ago, but your costs have crept up. Well, your profit and loss is going to give you that indication, especially if you start running comparative reports. Take your profit and loss for the quarter just gone by and compare it to the last 3, 6, 9 quarters. Imagine having all the quarters lined up, especially if we can turn all this into some graphical displays, okay, or some pie charts, okay. 80/20 is a great thing to look at. Where is most of your business coming from? 80% of your profits will probably come from 20% of your customers. 80% of your customers will probably come from 20% of the effort that you put into your marketing. You just got to explore which part of that is. You might be looking at your costs thinking, wages has gone up, the tax man's given me a harder time, the budget has changed a few things. A lot of stuff's happening within your world that you'll know, and there's only one way to combat that, and it's to do more sales. It might be that as you look at what you're doing there, you've got to change what you sell. The thing that you've sold for the last few years, the graph is drifting away because the market doesn't want it anymore. The price doesn't fit. Something's not right. You've got to go and explore why this is happening. Because the more you understand why things happen, good and bad, the more you can then move forward to your budget and plan and predict the future. And if you can predict the future, you can gain yourself some certainty and some clarity. So that's your 5-step process. Interpretation as a business owner is your responsibility to understand the data that's in with your business, but you don't have to do the job. You just have to know it's a 5-step process and delegate and outsource that to somebody or something to do that so that you can run those reports. And then we can talk about budgets and forecasts, which we'll do in the next video. Hope that helps in some sort of way. Any problems with it? Any questions? Chuck them in the comments, because I'll use the comments and I'll see if I can expand on this. I've been doing this for 35 years. What seems obvious to me may not be obvious to you, and I'll do what I can to help you fully understand everything so that you have real certainty about running your business. Speak to you soon.